Big immigration updates, how it affects the housing market, worsens the housing shortage, worsens homelessness, new charts to show you on all of this, plus a lot more key demographic trends that spell the future of both immigration and the real estate market. Let's get into it. Hi, I'm Keith Weinhold, Get Rich Education founder, Forbes Real Estate Council member, best-selling author, and longtime real estate investor investing both across the U.S. and outside the U.S. A whole lot of Cubans recently decided they no longer want to live in Cuba. Well, guess where they're coming? Yeah, as Cuba's economy tanked and the government suppressed dissent, we now know from newly released official figures that between 2022 and 2023, fully 10% of the country's population emigrated. Yeah, 10%. That is 1,011,269 people, a group larger than the entire population of Austin, Texas. And experts told the Miami Herald it was the biggest migration wave out of Cuba, and that goes back to before and after its revolution in 1959. There was growing disillusionment there, especially among Cuba's young people. Most of those who left ended up in the US, Canada, and Mexico per semaphore. Now expect 3 seismically big new policy changes that are impacting US immigration this year significantly, and that's whether people are coming from Cuba or anywhere else in the world. Important demographic shifts impacting the economy and housing. 3 new policies are expected to slow U.S. immigration through the end of the year. I'll tell you about the big ripple effects in real estate and all society that will be felt from that soon. But here, back on June 4th, new U.S. asylum restrictions were imposed. July 1st, Panama began deporting migrants that were trying to pass through there from South America on their way north toward the U.S. July 1st, Ecuador paused Chinese visa waivers. I visited Ecuador earlier this year to check on the immigration flow. Now, take a look at the first of a few vital charts that I have to share with you here. You can see how some existing forces and some of these policy shifts are slowing the overall immigration flow, with a hat tip to John Burns Consulting. Now, you see detained there. I learned from the chart curator that these are immigrants detained and allowed entry. That's what that really means. Therefore, rather than detained, perhaps a better phrase is processed and admitted. Of course, we don't really know how many immigrants are off the record here or illegal. All right, so what does this mean? Lower immigration, that could worsen our existing labor shortages and inflame cost pressures across the economy, and that's inflationary, and especially in construction. Yes, immigrants must be housed, worsening our housing shortage crisis, but immigrants also build needed housing. Now, record employment and earnings among young adults, immigrants and everyone else, they are driving strong demand for rental housing. And yes, we are talking all-time record in absolute terms here. Just look at this. Percentage-wise, high-income young adults, ages 25 to 29, are at peak age for forming households, driving strong demand for both rentals and starter homes. This is a major part of what's making both home prices and rents surge to new all-time highs. It's great for those that own houses, but I've got something more ominous and concerning to share with you shortly that you've got to pay strict attention to. But first, now that we talked about foreign immigration, what about internal migration domestically? Within the U.S., where are people actually going for these jobs that I just talked about? And this brings in a vital domestic migration story as we fulfill a holistic demographic picture for you here to help you see what's going on. And now we've all heard about hashtag RTO, the return to office movement, a lot, but stats show, it's not that much of a thing, and that most workers, especially young ones, they don't want to have to go into the office. The free pizza party really isn't that amazing. Among those employed, 35% worked their average day from home last year. That's up from 34% the prior year, and that's per the BLS. Yeah, I mean, you hear about these company RTO policies shifting from 2 to 3 days per week to 4 to 5 days per week, but the reality just doesn't bear that out. And you see that reflected in this ongoing high office real estate vacancy rate too. Companies say, oh, come on into the office or else you won't be eligible for promotions. But have you heard of the buzz phrase coffee badging? Coffee badging is the art of returning to the office to badge in, get coffee, chat, and then peace out of there. Work from home, it is still growing and allows workers to move far from offices where home builders can find more land. An increase of 5 million hybrid and remote jobs year over year is encouraging migration to suburban and exurban areas. See, that's where home builders can buy more land. That's the internal migration story. And 10 years ago, we all thought people would go to the far suburbs due to autonomous cars. You could just sleep and exercise while the car drives. So your commute length wasn't really a big deal. That's what we thought. But the whole use Zoom from home movement, that beat driverless cars to the punch. So that's where people are going. And the far suburbs, that's good for single family home demand and not as good for apartment demand. Apartments tend to be more urban. As I'm about to show you a concerning chart, hey, if you want to listen to me audio only every week, it's different material from this channel. Listen to the Get Rich Education podcast. It's how people of even modest income can build sustainable, durable wealth through real estate investing. Check me out on Apple Podcasts, Spotify, the Get Rich Education mobile app, or wherever you get your podcasts. If you have a shrinking population, it threatens to kill housing values because, of course, you could have more housing supply than you do occupants. And at the same time, a contraction of people, that means more vacancies in rental units and bankrupt landlords. Shifting birth rates are dampening long-term population growth. You probably heard that the U.S. has fallen below the replacement rate of 2.1 births per woman. That's kind of an old story. People are having fewer kids, and they're having kids later. This is the cumulative number of children per woman by age. Age is the cross the bottom, and it's divided into what decade they were born in. You can see that things were pretty steady until the 90s decade. The gray line, those women are now aged 34, 35, at 1.5 births here, and it doesn't look like it's going to make it to 2, plus, like the previous decades had. People born in the 1990s and 2000s are the ones becoming parents later and having fewer children, leading to fewer growing families. And what they do is reduce demand for the first home and the move-up purchases. It looks concerning, and it is, but there are 2 reasons why this isn't affecting the housing market and likely won't for decades. The first one is that real estate has a quarter-century lag effect with births. If a child is born today, they're often 25 until they rent their first place or own. So what's really happening is about 25 or 35 years ago, you need to see what was happening there and see how that affects the current housing market. And the other factor is, as we know, population change is found by taking births minus deaths plus net migration. That's the formula. Well, that last chart just looked at the US. What about the higher birth rates of other countries whose people emigrate here? And foreign birth rates aside, just how many people simply emigrate here? Before I show you the last chart that's just critical to putting all this together, a learning moment here since we are Get Rich Education. Emigrate means to permanently leave one's country of residence to move to another, and immigrate means to arrive in a new country after leaving another. For example, a Cuban emigrates Havana to become an immigrant in New York City. Here we go. Let's look at what's expected to happen to overall U.S. population between now and the year 2100. And I think this is the smart way to do it. Per the Census Bureau and Axios, starting at a national population of 335 million people today, a high immigration projection, low and no immigration, with a red most likely outcome line. The most likely outcome line shows that our population will rise appreciably until 2050, and then it will keep rising, though only more gradually until 2080. Then in 2080, which is 55 years away, that's when population starts declining. So we're going from 335 million Americans now to 370 million then. And something that the chart doesn't show, with this immigration aside, births are forecast to keep exceeding deaths for about 15 more years into the late 2030s. But as you can see here, immigration is a galactically huge factor. And here's the alarming thing that's happening in the near term. Millions and millions of immigrants have poured across our borders in just the past couple years. They're already here, and that won't change. In fact, check this out. I profile a giant swath of 2.5 million migrants that have flooded in recently, and it's not just where and how are we going to house these new immigrants, it's what's it going to do to real estate values and how it's already contributed to an all-time record homelessness surge. Watch this critical video right here.